Today I have a very interesting video because we're gonna talk about distributions going over into accumulations and vice versa. So let's go over it. I posted on my X watching this range on hype. Be careful, Bitcoin is indecisive yet, but it had a great return to zone. It was already a confirmed model, and I was watching for the supply to get hit. And what did you see? It was indeed get hit. I took it, and eventually it went over into an accumulation. So let's get over it and let's trade it like a real trade, because this was a distribution going over into an accumulation. What did we have here? We had our range, which was from high to low because you were in an uptrend, and that's gonna be your range. And you had your first deviation of your range right there. Let's go back in time, and you had your first deviation there, aka your tab 2. And then you're waiting for your tab 3. So your tab 3 POI was actually already valid because your tab 3 was a valid tab 3. You had some extreme liquidity there, and you formed a very nice high. You formed a very nice high here at your tab 3, which was a Wyckoff inside of a Wyckoff. So when you would have entered here, you could have been de-risked because you take some TP at the technical target and then leave it for lower. But you went higher on this model and you went for supply above because there was structure supply above right here in this area, and we were going to grab that. So you had to take kind of an L to get a W on this trade because we were going higher here. And what did you see when we came higher? We just had a normal Wyckoff model, which we always have. Let's enter it because let's draw the range like that. Let's connect the dots and let's see what happened at your tab 3, because your model 2 failed, which is totally fine. A model can fail. You have to take an L for a W. It just happens sometimes. So you had your third deviation, your third tap, and your third tap was a very nice high as well. And your break of structure was right there. And why was it right there? This is very interesting because this was your tab 3. It was a very nice high on the bars pattern as well. And this is your break of structure already. You could have entered here. Why? Because when you go on the lower time frame, you can see that price went lower, and this was your initial break of structure. Boom, that was your initial break of structure. But when price goes higher again and mitigates supply right there, then your break of structure moves to the other break of structure. So this is not your break of structure anymore. Your break of structure is going to be here. So you enter here short, boom, and you target the range low again. And I would have my stop not above this high, to be honest, because there's no reason to go higher. So I would have my stop above this high, target lower. So let's watch what happened, and you can indeed see that we went lower and we grabbed the range low. But what's very interesting here is that you left a pretty good return to zone, and we are gonna see what happens here because we are trading a distribution and we are trading an accumulation right after it, because here was your TP hit for your distribution. And when this TP got hit, I was looking at those highs. I was looking at this high is lower than this high, is lower than that high, is lower than that high. What means is that this is becoming liquidity. This is all becoming liquidity. So that's liquidity. And now I was looking, hey, maybe there's a possibility I can look to long this to the range high again. That's a distribution going over into an accumulation. You extend your range like that, and you extend your range like that, and you don't see me do this often, but that's why this video is so interesting. You have your demand right there under your range, which you bounced from. That was pretty nice demand, and you formed a good low here. Let's watch on the bars pattern if it was a good low, and it was a perfect low. And when you have a low like this, you were going lower, boom, going lower again, and going lower again. You form a model 1, and let's see what happened. Boom, we went higher. So we went higher. What I immediately see right now is that you had an unfinished candle right there, and that was the reason you went lower again. So you had an unfinished candle here, boom, which was not that nice, which made it a less good low, because if this had a wick to there, it would be a way better low. You see how much better this looks, so that's less nice, and we were going lower. And let's watch it, because this became your second tap. After all, this became your second tap, because on a higher time frame, this is just one deviation. You see, this is one deviation, and this is your second tap, and this is your first tap. So when you want to trade an accumulation, you're looking for your tab 3 POI, just like you do on your distribution schematic. You have those highs stacking up already. We are watching for our tab 3, and our tab 3 POI was this 1 hour demand zone. And do we have a 2-hour demand zone? Let's see. Let's see. No, we don't have a 2-hour demand zone. So this was your 1-hour demand zone you want to grab. Extreme liquidity is kind of building up right there, which is pretty nice. So this is going to be a liquidity point, and let's watch what happens when we let price do its thing and come into our POIs. And then you see price going lower, grabbing liquidity and going into our 1-hour demand zone. You can already see a pretty good low forming here. And right now you have your distribution, which already did its job, going over into an accumulation, because you have your step 1, you have your step 2, because this is 1 deviation as I explained on a higher time frame, and you probably are gonna have your step 3 right there. So let's watch and what happens if we break structure, because what do we see here? Another highs, this high, this high, this high, this high are all stacking up on each other. So this is becoming one big liquidity trail. This is becoming liquidity to grab for the market makers, and this makes it an amazing return to zone. Let's watch the volume profile as well, because the volume profile, you can see that it is an amazing range, because you have that volume profile looking like this. All the volume is in the middle of the range, amazing range. So let's watch if we can trade it up again. And you see this high is going lower, so this is going to be your break of structure on the 10-minute. Let's see if we have a lower break. No, we don't. So this is going to be your structure break. I will literally enter when this breaks. Why? Because it's a valid Wyckoff model. It's a step 1, it's a step 2, it's a step 3. Just like I say, and the reason why I don't do this often is because very often when you have a Wyckoff model, you have that distribution, you have your step 1, you have your step 2, you have your step 3, you're going low very fast. And what happens here? You create supply. So then you create a lot of supply on your way down, which means the return to zone is not good. But that was not the case in this. So what happened? Let's see if we break structure there. And boom, we broke structure. So there's your entry, literally. You have your 10-minute close right there. Entry, stop below the low. You have a good low here as well. Let's watch on the 45 if we had a good low. Very good low on the 45 as well. And very good low on the 1 hour. Oh, that was very good low. Because you had your 1, you had your 2, and you had your 3 going higher. Boom, expansion. And often you see a retest and then the real expansion. So let's watch what happened. And we were going higher. Your entry was there. Stop below the step 3. You can connect the dots, and then you're gonna watch if this plays out. You're gonna stick to your plan, and that's in distribution trading into an accumulation. And what happens here? Indeed, you met the target and price went higher, and you can target the range high. But one more advanced thing to look at when you're trading an distribution into an accumulation is that you can see if there is massive supply right there or massive liquidity. Because if this was, for example, and this is maybe a bit more advanced, but if there was a model 1 right here which had your step 1, step 2 and step 3, and it went higher and went lower again and reach the target, often TP at your extreme liquidity level right here, because it can always grab this level, break structure and go down again, you know? So be a bit more careful with your TP there. But that's the whole thing with trading distributions into accumulations. It can be wonderful as well. So I hope I explained it very nice. I hope you learned something new, because a lot of people ask me this. And see you in the next video, guys. Ciao, ciao.